Mohsen Edi, President, Memon Professional Forum, welcome you all for this post-budget session of the year 2020. I would like to start the session with the Tilawat Kalam Pak. Auzu billahi minash shaitanir rajim. Bismillahir Rahmanir Rahim. Qul huwallahu ahad, Allahu samad, lam yalid wa lam yulad, wa lam yakul lahu kufuwan ahad. Sadaqallahul azim. Today's session is going to be moderated by our past president and privileged, renowned speaker as well, renowned personality in the field of accountancy as well, Junaid Sheikha Saab. Junaid bhai, I would like to hand over the task to you so that you could welcome the panelists and proceed further with the session.
Thank you, Mohsen, for providing me this opportunity and leading the discussion on this very important topic. Bismillahir Rahmanir Rahim. Talking of the federal budget, it is always considered to be an important document and a much awaited document. Much awaited document in the sense, not only because it provides details about the changes in the taxation regime, but it also provides the vision of the government, where the government sees the economy going, where the spending would be going, which areas the government would like to focus in the couple of years or the next couple of years. So in that context, it's more than a text document that actually only provides the changes in the tax rates. So it's much larger than that. And as soon as the budget is announced, the investment, we also see that investment starts flowing in the direction in which the relief is provided or in the areas in which the incentives are provided. So not only it is a much anticipated document for the local investors, but also for the foreign investors. Talking of the budget and talking of the taxation regime and talking of the exercise, I would say there are three major stakeholders in this entire activity. Two, I would say, main stakeholders, and one, I would say, ancillary stakeholder. First one is the taxpayer himself. If you talk of the taxpayer, he always feels the tax burden is too much, the tax rates are very high. And he also criticizes the taxation system, which he always feels is rotten. I mean, rotten because the money that he pays in taxes or in terms of taxation is not money well spent, and he doesn't actually get the return out of it. So, and primarily because it's a rotten system, primarily because there are so much of leakages, primarily because of the lack of focus of the government, and there could be many reasons for that. If you talk of the other stakeholder, main stakeholder, which is the tax collector itself, they basically take a different position altogether, and they view primarily the taxpayer from the lens that they want to avoid the taxes. Whether it's true, whether it's not true, we will also find out from the learned speakers themselves. But this is the general perception that the taxpayer takes a position and the tax collector takes a different position. I think budget is an activity that actually helps, or that can actually help in bridging that gap, bringing both the stakeholders together. And I think here the role of that ancillary stakeholder that I mentioned earlier is very important, which are the tax advisors. So I think they can play a huge role in bringing together on one table, on one agenda, both the taxpayers and the tax collector. I mean, they've got the repo at both ends. They know the system, they know the taxation nitty-gritty. So what they can do is actually they can understand the anomalies, they can understand the concerns of the taxpayers, and they can actually pass it on or take it forward with the tax collector. And they can actually help in building the culture of this healthy tax regime. And going forward, as we move on in this discussion, I would actually like to hear on this particular point from both the speakers. Going forward, I mean, budget is not an easy exercise. I'm sure months and months of activities, data collection, observations, way forward, the particular political party who is in the government, their own agenda. It's a mixture of everything. So a lot of effort actually goes into it. So it's not by any means a very simple exercise. And obviously, for every difficult task, every difficult exercise, there are certain things that are left over, which I'm sure are also in this budget and which has to be addressed or which are to be addressed. Keeping this perspective in mind, I think we also need to look into the fact, if I may take the listeners 2-3 years back. I mean, there has been certain significant factors or certain significant events that has a huge impact on the budget exercise activity. What are these? Um, Pakistan entering the IMF program. And why Pakistan entered the IMF program? It was because the reserve had fallen to a record level, mounting debts. And obviously, if the debts are mounting, if you go to the IMF, which means a higher cost of debt servicing. So a lot of the portion or the majority of the chunk of your budget actually then goes towards your debt servicing. Lower foreign currency reserve I mentioned, and then the government also had to take action to adjust our currency. So a huge impact on currency devaluation, then interest rates, higher interest rates, which had an impact on higher inflation. Having said this, there are also certain positives for the budget, and the foremost positive is the falling oil prices, which I would say a windfall for the government. I'm not sure how effectively the government utilized that income that was realized through that windfall. I would actually request my learned speakers to shed light on this, whether the government effectively utilized that windfall that was generated out of that falling or continuously or rather crashing oil prices. Another positive, I would say, I mean, you also find bits and pieces certain reforms that were taken place. I mean, one foremost would be the government sincere efforts were witnessed at the government level in ease of doing business. I mean, I think, and there was a considerable, I think, jump in the index in which Pakistan was very lower previously. Um, Having said this, again, considering this budget, um, there were certain uncertain factors. The foremost is the COVID-19, which has a huge impact on the budget activity and the way forward, how the government is looking into next couple of years. There's a talk of um, uh, high level of people going out of jobs, businesses are closed, um, and then there is also a figure of 3 trillion rupees, which is an initial estimate of the losses that has arisen or that will arise because of the COVID-19. Um, and when we combine all of this, the economy is contracting. Large scale manufacturing would have an impact, would have a negative impact, and obviously, which would actually have a overall negative impact on the economy itself. And not to forget the locust attack, the टिड्डी दल का जिसको हम कहते हैं हमला हुआ था, जो शायद अभी तक हो रहा है, उसकी वजह से that had a huge impact on the agriculture sector, which is considered to be the backbone of our economy. What would be the main concern if we, I mean, I'm not an expert on tax, but if a layman studies the budget, um, what would be the main concern or what would be the main questions arising out of the budget? I mean, some of them are uh, uh, would the FBR would be able to meet its aggressive revenue targets? This is one of the question. How would we actually manage the budget deficit? And again, we are not being able to cut on defense expenditure. Again, a very low allocation on important sectors like health and education. And again, a few other external factors would be if the economy or the global economy or the regional economy is slowing down. So this could also have an impact on the remittances that we receive from the Gulf countries, sorry, especially, and this could also weaken our exports. So again, we are seeing, or we are forcing a low level of reserves or income from that side. So these are some of the layman questions that actually come into my mind when I study this budget. Without taking further time, I would take this discussion to our learned speakers. Let me first introduce both of them to you. We have got two extremely talented individuals who are expert in their respective areas, who are tax experts, and whether it may be any committee of ICAP, whether it may be any committee of income tax bar, whether it may be any committee of any federation or chamber. So they are there leading the discussion from the front. Heather Patel is the tax partner with E by Ford Roads, a very seasoned tax practitioner. We welcome you, Heather. And Heather would be the first one to speak, and he would be speaking on the subject of direct taxes. And our other learned speaker is Mr. Adnan Mufti, who is the founder and tax partner of Moshika Mufti, and he specializes in indirect taxes. So, Assalamu alaikum to both of you, and we welcome you on our event. So, Heather, over to you, please.
Thank you, Junaid. Assalamu alaikum, everyone. Assalamu alaikum to the President, Mohsin Bhai, office bearers of Memon Professional Forum. And I see a few past presidents, at least I saw one in the camera, Hanif Jano Saab. Assalamu alaikum to the past presidents as well. It's a pleasure to come to your forum for discussing the finance bill. I've been assigned the task to look at the changes in the direct tax side. Every year when the budget is announced, before that I feel that, apart from tax easing measures, I expect that, nothing harsh will come in, nothing difficult will come in, but it's been a hope that has not been fulfilled for the last, I think, 20 odd years that I've been seeing the finance bill through, and every time there are surprises which we don't like to see. So there are positive amendments as well this time. There are amendments which we feel that the FBR has pushed on the agenda of the bureaucracy as it goes. I don't need to mince words. I think most of the people on this forum are professionals and they know how things are and how things are happening. Because of the budget exercise, as Junaid rightly said, it's a long exercise. It began in late December this year, and then they started compiling proposals from stakeholders. Then there was a change of guards at the FBR, and a very seasoned professional left the FBR chairmanship, and then the guards, the seat went to the typical bureaucracy leadership, which has always been there for a majority of the time. So after that, we entered February, and then come the COVID situation. So the budget exercise became something of a back burner, and then there were some tough things to do, like allowing emergency imports and things like that, and that was the focus of the government. So in the last days, I think in May, perhaps during late days of Ramadan, the budget exercise picked up again, but now the enthusiasm was very mellow because of obviously the lack of communication, no meetings on site, and most of the discussions the stakeholders had on Zoom with the FBR people. So what you see in the budget is nothing significant, nothing to say that there are some drastic measures to address the short collection of tax. I didn't find anything as such. Nothing on the broadening side. Any huge measures. There are a couple of measures, but you'll see that those things are already there, and it's just window dressing of the law that has happened. So it's not a very, I would say, exciting document to read this time, the finance bill. And but I'll let you see through many important areas that have things that have happened this year, which are proposed. let's see, how it goes through the parliament, through the standing committees, and what finally comes out in the shape of the Finance Act. We'll see very soon. So, to some of the questions that Junaid has raised in his opening remarks, I think I'm not an economist, but I think some of the questions were more related to the economy and the overall impact of those measures. Like you talked about the drastic fall in the petroleum prices. I think as a consumer, I was very happy that diesel went down from 120 rupees to something like 84, 82 rupees. So fantastic for the consumer. But there are critics and there are people who are saying that the government passed on too much. It should have held on to some portion to fulfill its tax gap. But there are thoughts by economists and people who are in the business. But this is where you are. So I'll start, and I've been given 15 minutes, so I'm conscious of the time limit. I'll try to cover as much as possible. If Can you see the screen?
Yes, otherwise if you could press F5 to ये slideshow हो जाएगा, that will be.
Yeah, I'm doing that, but I think ये screen share पे आ गया है, तो अब वो नहीं हो रहा है. It's not working.
नहीं, आपको click करना पड़ेगा इसी presentation पे, और then शायद इंशाल्लाह.
दोबारा करता हूँ. Oh yes. Thanks for the technical support. The finance bill, as far as the direct taxation is concerned, it has got 2 or 3 areas. There are some fundamental changes in the way the department will now look at your returns and the way it will assess you. So many of you who would be keenly looking at the taxation policy of the government over the years, you'll see that in 2001 we had a drastic change and we walked away from the traditional 1979 law, and we came out in the 2001 ordinance, which was totally drafted on some new lines, and it was a breath of fresh air on many aspects. The most, I think, important pillar of the Finance Act, as far as the assessment was concerned, was that the concept was that there will be self-assessment all through, and which will be backed by strong audit. This was the theme of the ordinance, I would say. This was the main theme. And since 2001, we have been going through with the same theme. Although we have struggled with audit very badly, we have yet to see very focused in the way tax audits are done in good economies. That those features we had yet to see. We have tried them to teach FBR a lot about audit at the ICAP, at different forums, but we haven't attained those finally. There are pockets which have improved, like some units in the large taxpayer units. We see good audits over there. But by and large, we haven't achieved the whole theme of self-assessment backed by strong audit. Now, what we see this year in the finance bill is that there is a shift from self-assessment, and now we are going back, and now they are saying that when you file a return, your return will be subject to initial scrutiny, and this scrutiny is open for 6 months. So, which means that today, if you file a return and you claim a refund, so as of today, you can file a refund application simultaneously with your return, and this is what practically happens. But now you can't do that, and your return will not be deemed to be assessed the way it is today for all purpose of the ordinance. And they have the power to look for your any issues with arithmetical accuracy in your return, any incorrect claims that you may have lodged in the return, or any issues with your carry forward losses you may have claimed, any allowances that you have claimed, any credits that you have claimed. So this is a departure from self-assessment now. And the important thing is that these powers to look at your initial calculations and your arithmetic accuracy and all that, they were already there, and they had the powers to like confront you if there is something wrong in your return initially straight away. And they also had the power to declare your return invalid, even in the present law. And then as far as incorrect claims and carry forwards and claims of credits are concerned, it was always possible for them to amend the assessment or take your case for audit and do that. Why is there now a need to stop your return from being self-assessed? That's a big question mark. That shows the frame of mind with which the authorities are going forward, and they are pushing such amendments in the law. So this will do nothing, but this will distort the basic concept of the new law, which was probably, it's not new anymore. It's about 19, 20 years old, but it's always progressing. So this is, I would say, this is a regressive amendment, and we'll have to wait and see how things shape up, and how practically things happen now, since the self-assessment is not there. So this is one thing. And then on the amendment of assessment side, they are trying to trickle with things. When you go for audit, the law used to say that you'll identify definite information acquired from an audit, and if you want to do any disallowance or anything, that will be based on definite information. Now they're trying to amend that, those wordings in law, to take away definite information from there. So the thinking, it appears that the FBR is trying to accommodate the thinking of the officers, that why do you want us to be you're so particular about things and about highlighting specific instances and all that. But the direction, to me, it doesn't appear, although legally I am confident that nothing has changed, and I can still make out my case if I am in appeals, that where's the fault. You can't just disallow on surmises. But what I'm trying to say is that this shows the thinking behind the scene, and the way things are going. So it's not very encouraging, especially in the times when when you're looking for broadening the tax base, bringing more taxpayers in. So these are not good directions to look at. So the government has to closely look at what they're trying to do, what they're trying to propose. So this is something that they must see the direction of the FBR and what amendments they are proposing. A good provision coming in. We had the in the past the settlement commission concept, where if there is an assessment going on, and if you are not happy with the way things are, if you are if you are going to go through a harsh assessment, then you can go to a committee. Now that committee has been named as Assessment Oversight Committee, comprising the Chief Commissioner, Additional Commissioner. So the taxpayer can propose a settlement on his own, that this is what the officer is proposing, and this is what I propose. And then the committee can look at the proposal and see how best it can be settled. They can come out with a settlement, and if the taxpayer agrees, he can deposit the differential tax, and that's how the case closes. But if a settlement cannot be reached, then things go back the normal way. This is what the proposal is. I think it's a good proposal to avoid undue litigation. It's a good thing, but one has to practically see how these committees will work, and how things will go along, and especially in pressure times, when there is pressure to collect more and more tax. So one has to see. But the concept is good. I welcome the concept. Alternate dispute resolution, this has always been there. As in 2018, the law became very harsh, and the concept of alternate remedy, it went out, and it just became another appellate forum, where if you go there, then you lose your alternate remedies of appeal. So none of the taxpayers went for dispute resolution over the last 2 years. As a result of that, they realized that the law is not good, and there's no use for this remedy. There was a lot of demand from taxpayers that it has to be made effective as in the past. So changes have been made, and now this is an alternate remedy, where you go and you seek a solution. The committees, there's an independent committee comprising the chief commissioner, then the one professional, somebody from the industry. They sit together and they form an opinion, and then pass an order. The FBR has to endorse that order, and then if the taxpayer agrees, now then fine, they go with the ADRC decision, and then they withdraw the appeal later. So the issue was that the previous law wanted you to withdraw the appeal beforehand, before you go to the ADRC, which was suicidal actually for the taxpayer, because then you are left out with no other option. So that has been corrected, and things would be good. One thing, very minor thing, is that previously there used to be it was proposed that there was a decision of a majority out of 3 was acceptable, but now it says there has to be a consensus decision. So consensus decision always will be a difficult task. It has to be seen how this works, or will the committees fail? I don't know how things will move forward, but practically when we go there, we'll see how it works. Then coming out of the assessment and the mode of taxation, how they approach the returns and things, that there's a good legislation to give legal cover to real-time access that the FBR wants from NADRA, from immigration department, from local authorities and all that, to gather information about taxpayers. So here's the legal cover. They can gather information from all these sources. And coupled with that, this year there is an amendment in that the taxpayer's profile has formally been now launched in the law. Its profile is already there in the tax return. If you go there, you have to fill certain information, but now it is mandatory for taxpayers, who are in doing having income from business, who are having different sources of income which are under final taxation, for non-profit organizations, for any person the board would like, it is mandatory now. And for all taxpayers who now come forward, they'll have to have, and they have to fill out this profile mandatorily, giving details of bank accounts, utility connections, business premises, types of business, etc., etc. So this is already there, but it has now been formalized, and there are now penalties actually if you don't do that. And the biggest penalty is that if your profile is not updated, it's not fulfilled according to requirement, then you may not be on the active taxpayers list. So everybody will have to do that. So if the taxpayer profile is there, the law to give legal cover to the access to real-time information is there. So I believe the mechanism is now there for the FBR to have real-time information before they look at tax returns and all that. The only challenge is the implementation, which is the difficult part. It's to be seen that how they take benefit of this law, these law amendments, these laws, and how they go forward and look at things. But good legislation, good attempt to broaden the tax base and gather information. Regarding certain restrictions, I'll just point out one item where if there is an industry which is supplying goods to various customers, if they make sales to persons who are required to be registered but they are not registered in the Sales Tax Act, and if a sale to such person exceeds 100 million per person per year, then the sale to those types of persons, the proportion that those sales have with your total sales, in that proportion, your expenses, your admin expenses can be disallowed. It's a harsh provision, and the disallowance has been capped at 20% of your total deductions claimed. But I think this is a failure on the part of the tax FBR to bring people even with such high turnover into the tax net, and now they're trying to penalize the other side, which is just selling goods to them. But it's a harsh provision. Businesses are already demanding that this should be withdrawn. On the property side, a good option is there now for every individual and individual also to offer tax on a net profit basis from income from property. Previously, this was only allowed to people who had 40 lakh plus rental income, but now this option is open for everybody. You can offer your bottom line profit out of property income to tax at the slab rates instead of offering tax on a gross basis on the gross rental income. So it's an option. You can go either way. You can get taxed on a gross basis. You can get taxed on a bottom line basis as you feel appropriate. I think it's very fair. Then a restriction has been placed on any foreign lending that you have, that any interest that you will pay to a foreign lender, be it your associate or be it any third party that you borrow money from. If your total expense of profit payable to foreign lenders is more than 10 million for a tax year, then it could be capped to 15% of taxable income, and the unclaimed amount could be carried forward for the next 3 tax years. And if you have a gap over there, then you can reclaim that. Otherwise, if every year you have a high foreign interest payment, then it could be capped to 15% of taxable income. But this is also I think a bit harsh, and for attracting foreign investment, I don't know, because most of the projects which come in, they look for borrowings on a long term and instead of equity injection. So how things will the foreign investors will look at this, that has to be seen, but looks to be a bit harsh for them, especially on the side of when you have independent borrowing from third parties and not within the group. So you're not trying to plan something out, but you are just borrowing. So it becomes your cost of doing business will go high. Property income, I think much has been said over the last 2 months since the construction package came in. Now the rates have been rationalized for development for if you sell a piece of land or if you sell constructed property. Both are not taxable if you hold the property for more than 4 years. and there's a gradual reduction of the amount of gain that would be taxed. I've given in the table, but nothing will be taxed if you hold the piece of land, or you hold a constructed property for more than 4 years. Some harsh provisions for non-profit organizations, which are now, going to, I think they're going to affect, even genuine charitable organizations like, AD Trust, and you have these hospitals, SIUTs and all that. They now say that to qualify for a tax credit, 100% tax credit, to get exemption, you will have to give a statement of voluntary contribution and donations received, which will be a big challenge for these charitable organizations, because most of the funds that they receive, they are benami, and they come from Bandai Khuda, and there's a lot of cash contribution coming in to these hospitals and these charitable organizations. So, but this is there, to regulate, some of the areas in the charitable institutions where the government finds that there's a lot of misuse of funds. But genuinely, I feel that this will affect some of the very genuine charitable organizations that are working in this country. So this is one thing I would like to point out. And then obviously there was a list of good institutions like SIUT, Indus Hospital, AD Foundation, and many more, in clause 66 of the second schedule, where there was a direct exemption for them. So they were not liable to comply. They were not required to comply with, very strict provisions of section 100C, which requires, many things to be done. But now, the exemption has been made subject to the provision 100C, which means that now all non-profit organizations are on the same page, whether you have a direct exemption under 66 or you qualify as an NPO under the other part of the law. They'll all have to undergo the same process. So it's uniformity for all. It could be harsh for some, but now this is the reality which looks going forward. How things will work out for some of them, we'll have to see, and we'll have to find out ways how to be practically implement this, and for not, so that it's easier for them to, they continue to work, and their genuine fundraising is not affected because of this. Final taxation, as it happened last year, it's gone out, and now most of the withholdings are under minimum tax regime, whereby whatever taxes withheld, that has to be compared with your actual liability based on profits. So there's amendment in the law now that there's no statement of final taxation now, which means that every taxpayer, be it whatever source of income you have to file a profit and loss account, your accounts, and you have to submit them for scrutiny. So everybody is now under scrutiny. It's part of the broadening campaign. I think this is another step towards that direction, that everybody ultimately will pay tax on the real income. So this is in that direction. On the appeal side, I think just one harsh provision where it says that if you lose an appeal in CS at the first level of appeal, and you go to the second appeal, then you must pay 10% of the tax that has been upheld at the first appeal. I think this is a harsh provision. You look at the type of assessments that happen and type of appeal orders we get at the first stage. So it's not fair to mandatorily require 10% tax, because in some cases that 10% also works out to huge, and you know how difficult it is to get back refunds. And fundamentally, it is wrong to expect a taxpayer to pay tax which he doesn't agree to. So I think there's a lot of pressure and there is a lot of noise on this, and I hope that this goes out before it is finalized in the Finance Act. On the import side, very quickly, there's fundamental change on the taxation on imports now. For industrial undertakings who would be importing goods for their own consumption, it says that for capital goods and raw material, the tax rate has been slashed down to 1% and 2% respectively, and it will be an adjustable tax. It will not be minimum tax. There's a third category in the 12th schedule. A 12th schedule has been brought in, where the HS code wise list has been provided in part 1, 2, and 3. So the part 3 says that whatever goods that fall in this part, they'll continue to be subject to 5.5% tax at import stage, and that will continue to be minimum tax. The problem here is that the feedback that we've got so far from the industry is that not every raw material is there in part 2, but there's a long list of material, with every so many industries who are complaining that my raw material is not there in part 2, and even they are not there in part 3. So the board has powers to keep on amending this schedule, but I think it will be a tough task, and it will take a long time to settle differences. And associations are writing now to to find another better way of handling this, Because if you go into 5.5% and you have partially some of your imports are under adjustable and some of them are under minimum, it will be a very difficult task to create a tax computation. Imagine half of your imports are on minimum tax side, half of your are adjustable. I can't imagine how that computation of your bottom line profits or your taxation will come out. It will be a big mess. So this has to be revisited. There's a lot of going to be discussion. An anomaly committee has been formed. I'm sure this will be discussed over there. The exemption power, another very important thing, the exemption power for import of goods has totally been taken away. And this is, I think, not fair, because just saying that I've reduced rate to down to 1 and 2% doesn't justify that you totally take away the powers of exemption, because there will be cases which will be under losses in tax because of carry forward losses, because of depreciation, because of tax credits. So in that case, which means that the taxpayers will be paying 1 and 2% tax at least, and then they'll be subsequently claiming refunds, which will be a difficult task again. You see what's happening to the refunds at present. So I think it's a harsh provision. The exemption powers should remain there, maybe for a restricted purpose, but it should be there. It should not be totally taken away. I think I'm already running over time. I think the remaining things I can cover up. One last thing, I think I saw a news item last night that the Prime Minister is very upset that the construction package has not been implemented well by the FBR. Initially I was surprised that this package has come 2 months ago, and there's no change in that package. It has just been brought in the finance bill as it is to ratify. So why is the Prime Minister saying now? So somebody has highlighted that the REITs, the construction REITs, which are a very good tool for gathering funds and putting it into construction business and development business, because they are exempt from tax, they'll be the dividend out of that will be now taxed at 25%, because the law says that if the dividend paying company is exempt, is not paying any tax, then the dividend will be subject to 25% tax instead of 15%. So generally also this is very harsh, because if you, on one hand, if you give an exemption to somebody, and on the other hand you increase the rate of tax on the dividend disbursement, the whole purpose of giving this exemption, it doesn't work well. So I think this is a very important, and I think the Prime Minister has taken notice. So I hope this not only gets done well for REITs, but also for general companies. Junaid, I think we can cover up the remaining withholding provisions in our question and answer sessions if there'll be any questions. I think I've already run over time. Thank you very much. I hope I was able to explain things well to the participants.
Thank you. Thank you so much, Heather. Thank you so much. Adnan, can we, are you there, Adnan?
Yes, I'm there.
Just before Adnan, before you start, I would just to change the mood, I would just like to share a screen for a few seconds. So can everyone see this?
Oh my God.
Yes.
So over to you, Adnan, now, and you've got like a maximum of 15 minutes. So please.
Well, with this, after this photograph, I don't think I have much to
Okay.
but we'll try. I will be.
Nana, you would like to share your screen?
Now, can you? You have
the rights. You have the rights. You can share the screen if you want to.
Well, can you see this now?
No, boss. There is an option besides the chat.
Besides the chat, yes.
Share the screen. Share a screen. Share screen now. Yes. You can see this. You can press F5 so that.
Is this okay now?
Yes. Yes, it's perfect.
Bismillahirrahmanirrahim. Thank you, MPF and the managing committee for putting in an opportunity to basically share my views on the indirect tax side. I'm sure time allotted to me. I'm sure I will be able to. Well, just to give you an overview on the indirect tax side, I think I would say that basically we were expecting because of the pandemic that is going on. We were expecting a rate cut in the GST, especially with respect to the food item. There was news circulating, and there was a demand from the industry as well that food items may be slashed, the rate of tax being slashed up to 5%, but that has not been done again. On the zero rated and the sport oriented industries front, there was a demand that zero rating may be restored, but that also has not been done. We understand that there's a very thin line. The government is under the IMF program. We do not have much room to basically roam around and to facilitate. So basically, I think it was, I would say, on the indirect tax side, it is somewhat a balanced budget. There are some few things that are positive. There are few things that are, I would say, not negative, but we'll have to see how they shape up in the coming. Basically, I'll just take you because of the time constraints. I'll basically come up. Yes, there is a concept of active taxpayer in the law, both in the income tax and the sales tax side. So, in the past few years, there have been attempts by the government and the FBR to basically bring harmony between the income tax and the sales tax laws. And this particular sort of attempt has been fortified in this budget as well, whereby they have said that failure to file statement under the income tax law, section 165, will basically classify the taxpayer under the sales tax law as a non-active taxpayer. There are repercussions for being a non-active taxpayer. You are charged more, and you all your exemptions and then the incentives, they're halted. So basically, this is an attempt again to basically push people to become active taxpayers. Value supply, there is a change in the law. The first point is the reference of BABDA was basically the supply of electricity. In case of the Finance Act 2019, there was perhaps a mistake whereby BABDA's reference was omitted. Now they have basically brought back the provision, the retrospective effect from July 2019. There is a new clause. There is a positive change whereby the second-hand market of vehicles that has been offered a taxation on a marginal side, not on the gross sales value, but on the marginal side, marginal difference between the sales price and the purchase price. This concept is alien to the very scheme of the act. However, it's a good step, and I think all the sectors of the industry, of the economy, all other second-hand market sectors, for example, furniture, for example, equipment, etc., also be incentivized. If the law says that if the import was made with the proper documentation, and the dealer is basically purchasing goods from the owner and selling it to other person, he is liable to tax on the difference of his sale and purchase value. This is a good step. I think this will basically facilitate more and more people. Sales tax withholding, yes, there was an ambiguity regarding taxation rules. So this has been, now the charging section has been amended, and basically this has now clarified. This has now clarified the law in a better way, and now we can say with comfort that withholding tax is applicable on services rendered within the Ahmad capital territory. With respect to 11th schedule, again with the motive to basically push non-active taxpayers into the tax net and to force them to comply, there is a provision whereby non-active tax registered people, but who are not filing returns, who are basically enjoying tax rate as applicable to compliant taxpayers, that has been withdrawn, and now non-compliant taxpayers will be treated as par with unregistered people. Therefore, all those registered taxpayers who are not classified as an active taxpayers will basically suffer whole of sales tax withholding when they supply to federal government agencies, while their supplies to companies will attract sales tax at the rate of 5% of the gross value. There is a new concept on wastage. If you see the budget speech read out by the read out by the industries minister on the floor of the National Assembly, and compare that particular portion of the speech with the amendment that has been brought in Section 7 of the Act, it says that now the board is basically attempting to put restriction on wastage. Basically, government is what the minister has stated is that the government is concerned on malpractices whereby production is suppressed under the garb of wastage and consequently sales is suppressed and ultimately low sales tax is paid to FBR. So on the other hand, entire input tax is claimed on that particular part, which was basically classified as wastage at a later stage. So basically, FBR is now trying to put curb on the wastages. Good attempt, I would say, but it is at the moment unclear how the provision will be implemented, whether input tax will be disallowed or whether the wastage will be treated as goods units and added back to the production. In this particular provision has been inserted both in sales tax and excise laws. In excise, we understand that it might be, you see, put in place because excise is under in the goods sector, excise is basically assessed on production, while in the sales tax, it is the supply which is basically taxed at 17%. So on one hand, we understand that the placement is probably unfit, not appropriate under Section 7. It doesn't make sense. And on the other side, Section 3 is silent, and we cannot see and we cannot say with certainty at the moment how it would shape up, how the wastage will be added back to the production and assessed to sales. As we'll have to see, probably we'll have to wait for some rules and to basically assess how this provision will be implemented. It is another amendment whereby powers to modify orders on question of law. This is a replica of 124A of the income tax side. Assessing officer will be under legal obligation to follow question of law decided by the Tribunal of the High Court in favor of the taxpayer in subsequent period, unless it is reversed by the Supreme Court of the High Court. Basically, this is a good attempt, and basically we understand that it will reduce unnecessarily unwarranted litigation, whereby a single particular issue is it is disputed again and again in the subsequent years, notwithstanding that it may be pending before appellate authority, either before the Commission of Appeals or the Tribunal. So I think this is a good step to curb litigation. CNIC number of invoice. There are two amendments on this side. First of all, retailers have been given an extra incentives. There a threshold for sales without CNIC was which was 50,000. Now it has been enhanced to 100,000. It is to be noted that this incentive is only available for retailers and not to manufacturers, importers, wholesalers, distributors who will basically be required to have CNICs of their buyers without any monetary threshold. We saw during the currency of this particular year, there was an MOU signed by the previous chairman and the traders. Unfortunately, we do not see any sort of that MOU in the law. So we can say with certainty that it is not tenable under the eyes of the law as yet. There is a provision whereby if you do not provide CNIC of the unregistered buyer, proportionate input tax is disallowed. Now the scope of disallowance has been extended to services as well. So basically, we can see that this is a harsh provision, I would say, because that would mean that all sales tax that a taxpayer pays to the provincial tax authorities or to FBR under the Islamabad Capital Territory law will be disallowed if the CNIC is not collected. So this is a harsh law. I think this can be challenged before the courts of law if not removed, because availability of CNIC is not that easy, which is as the government conceives at the moment. Provisions regarding e-audit, the commissioner has been given a task. This is a new provision. At present, the commissioner is empowered to select the taxpayer for audit, whereby and the audit exercise is conducted by the subordinate tax officers. Now, the commissioner is also empowered to basically commence e-audit. This is basically a step towards automation. And at the moment, in its infancy stage, only the commissioner is empowered to conduct e-audit. We'll have to see how the audits will commence and how things progress with the automated audit environment. Returns at the moment, taxpayers file returns only with essential information. There are a number of annexures in the return, but it has seen that taxpayers, some of the taxpayers, they only file annexure C, sales data, and basically avoid the penal provisions. Now there is an amendment whereby the taxpayers are required to file all their annexures with the tax authorities, and until this is done, the partial filing of return will not be classified as filing of return, and it will basically invite penal provisions. Offences and penalties, we have seen there was a provision of integration of taxpayers system with that of the FBR, and if this was not done, there was a concept of sealing of the business premises after 6 months. Now onward, this particular provision will be invoked after 2 months of non-compliance, and this business sealing will continue unless the integration requirements complied with. There is the penalty of non-compliance of real-time access of information under Section AB has also been enhanced from 25,000 to 50,000. Appeal, my friend Heather has already covered this, so I will skip this. Alternate dispute resolution, this has also been covered by Heather, so there is no change under all the fiscal law. Real-time access 56 AB, yes, it has also been covered by Heather. I would like to just make an observation. You see, the board has been empowered to make arrangements for our real-time information from all the authorities, be it NADRA, FIA, Bureau of Immigration, Land Record, provincial authorities, etc., etc., etc. But you see, we'll have to measure FBR's capacity at the moment and what it has been over the years. Because besides all these new measures, at the moment FBR has access to records from the electricity and gas transmission companies, whereby out of over 3 million commercial and industrial electricity and gas distribution companies, there are only few thousand that are registered with the tax authorities. So there's a huge gap of unregistered business connections, industrial and commercial connections, and FBR has all this data, but unfortunately they haven't come up with enforcement measures as yet. So we'll have to see how this new measure will basically expand the tax net. Applies to unregistered person. I would say a harsh provision that was basically conceived under the amendment ordinance in December 2019, whereby only manufacturers were barred from supplying taxable goods to unregistered persons with an annual threshold of 100 billion and monthly limit of 10 million. Now this scope of Section 73(4) has been extended to every taxpayer. I would say this provision unjustified and unwarranted in the presence of further tax, because when we sell to for unregistered people, we charge for the tax. There is a penal tax of 3% more. There is a higher withholding tax from unregistered people. There is a provision of CNIC as well. And of course, besides above all, there is a third schedule goods whereby manufacturers discharge their liabilities at the time of sale. So in the wake of all this, these provisions, all these measures, the extension of 73(4) to all taxpayers is unjustified. Uh, Besides this, we understand this is against the principle of national justice and fundamental rights, because I should not be condemned for anything that has been done by my buyer. How can I compel anyone to be registered? How can we, with the government and the FBR, with all their powers and enforcement rights, they have failed completely to basically extend the tax net. How can how can they expect an ordinary taxpayer, an ordinary seller, to basically enforce this registration drive? So I think this will basically this will only persuade taxpayers to adopt creative accounting. Of course, this will open litigation, and people might challenge this provision before the court. Now, coming to the zero rating and exemption areas, there has been zero rating provision, zero rating facilities of raw material, as well as locally manufactured plant washing business set up in Gawada free zone. However, to misuse, avoid misuse, such goods are right back to the tariff area.
Adnan,
Sir,
Adnan, just couple of minutes, couple of more minutes, then we have to go to question and answer session, right?
sir, I think I will need only 4 minutes, 2-3 minutes.
Okay, thank you, thank you.
So the tax will be charged at the original stage. Basically, original cost. You see, this is basically something what we have seen under the Ahwan transit trade, that goods do not actually travel to that jurisdiction and they are sold back in Pakistan. So this, to avoid this, that's important. There is the import and supplies of ships wide entry 103 of 60 rule that has been extended to 2023. Import and supply of diabetic food consumption that has proposed to be exempted. For tier 1 retailers, again, this is a good step. Their tax rate has been reduced from 14% to 12%, but with the common arithmetic, we can say that with 17% input tax, they're likely to end up in refund position because their input will be 17%, output will be 12%. Further, the scheme of 5% cash back to customers that was announced in the previous budget that has not been implemented as yet. So we can be sure that the refunds problem will crop up, and refunds, you can understand, refunds are not readily available for the taxpayers. Return of VAT reports for manufacturers, there is a change in the 12th schedule, welcome change, that the proposed amendments restored exemption of VAT and import stage for manufacturers importing raw material. Only the manufacturers who will import raw material and semi-finished goods will enjoy this exemption. This will not be available to any other classes of taxpayers. FED, coming back to FED, there are not many changes, only few, I would say. The concept of audit once in 3 years, once audit in 3 years, that was offered some few years back. This scheme has been brought, withdrawn, I would say. It was withdrawn earlier in the income tax side and the sales tax side. Now it has been withdrawn. There is a dispute to our account that which may arise whether audit of both years during which this provision was in the statute book. How will this shape up for the taxpayer? This will have to be seen. Powers to confiscate dutiable goods, section 27 has been amended. Now the scope has been proposed to be expanded all dutiable goods for confiscation. This is a harsh provision, I would say, and it will be seen how field formation may basically implement it. Appeal to tribunal, this has been covered by Heather. Changes in duty rates, yes, there are certain duty rates change. Cigarettes, that has been duty has been enhanced from 65 to 50%. Filter rods and has been increased. Cement, there has been the only reduction I can account is partial reduction in the case of cement. Sensing that caffeinated energy drinks and e-liquids and e-cigarettes are in common use, a duty has been imposed. There has been a duty imposition on imported and locally manufactured double cabin, whereby 25% and 7.5% respectively as duty has been imposed. I think yes, I am. Thank you very much. Over to you, Suhail.
Thank you so much, Adnan and Heather, both, for a detailed deliberation and very much relevant as well. Now we open the floor for question and answers from the audience, if there are any. So there is an option to raise or to ask question in the menu by raising your hand. So this is one of the option through which you can ask question. Other would be to write a question to the host if you don't want to speak it out. So both the options are available. We open the floor for Q&A.
So anyone can ask a question, and they can raise the hand, and we let them speak so that we can open up the mic for them. Or they can, if they are not being comfortable for raising their hand, they can write it down in the chat box as well. The host can receive the questions as well. So do we have any questions regarding Danish Abdulaziz?
Adnan, sorry, can you please stop sharing the screen?
Hello.
Yes, Danish. Can you please?
That's okay.
Assalamu alaikum. My question is that whether the change in FED will be applicable from 1st July or it will be applicable with immediate effect regarding the reduction in FED rate from 2 rupees per kg to 1.75.
It will be from 1st July.
1st July. Okay, thank you, sir.
So we have any other question from anyone? I'm also going through the Facebook.
I have a question with Heather. Can I ask Heather?
जी सर.
Heather, उसमें जो voluntary pension schemes हैं VPS, उसमें थोड़ा सा elaborate कर सकेंगे? जो commentaries में देख रहा था, different commentaries में कुछ different तरीके से elaborate हुआ है. तो exactly अगर let's say pre-retirement अगर withdrawal है, तो pre-retirement में पहले तो ये था कि 3 year का जो average tax rate था उस पे tax deduct होता था उस पे withdrawal पे. तो अभी भी वही है कि change है उसमें कुछ? Pre-retirement withdrawal.
मतलब इस पे रेट पे तो कोई चेंज नहीं आया.
रेट पे कोई चेंज नहीं है.
रेट तो वही है.
अच्छा, तो मैकेनिज्म भी वही है, रेट भी वही है. चेंज, लेकिन वीपीएस में आई थिंक देयर इज अ चेंज इन वीपीएस. इज इट सो?
नहीं, मेरी नजर से तो नहीं गया है.
ठीक.
अतीक साहब,
अस्सलाम वालेकुम. मेरा ये सवाल है कि ये यूज व्हीकल अगर कोई कंपनी सेल करती है तो क्या इस पे भी सेल टैक्स होगा क्या?
आई थिंक ऑडिबल नहीं है. अतीक साहब थोड़ा सा रिपीट करेंगे, थोड़ा सा लाउडली बात करेंगे.
मेरा सवाल ये था कि अगर कोई कंपनी यूज व्हीकल को सेल करती है तो क्या इस पे भी सेल टैक्स चार्ज होगा क्या?
ये बेसिकली डीलर्स के लिए किया गया है. कंपनीज के लिए तो एप्लीकेबल नहीं है. कंपनीज तो वैसे भी टैक्सेबल होती हैं. ये सिर्फ डीलर्स के लिए किया गया जो सेकंड हैंड गाड़ियों की डीलरशिप में इन्वॉल्व है. सिर्फ उनको ये एक एक तरह से इंसेंटिव दिया गया है कि वो किसी तरह से टैक्स नेट में आ जाए, और कहा गया है कि उनको सिर्फ मार्जिनल टैक्स, अगर कंपनीज गाड़ियां बेचती हैं तो वो तो सिर्फ 17% के रिजीम में रहेंगी, उनके ऊपर ये एप्लीकेबल नहीं होगा।
चल, थैंक यू।
बिल्कुल जी। कैन आई आस्क क्वेश्चन, ये जो 25% वाला डिविडेंड के ऊपर जो एग्जेम्पशन है, हैदर भाई आपकी प्रेजेंटेशन में था, तो those companies who are not paying any dividend, they have to pay taxes. No, in fact, those who are not paying on their income, they have exemptions. उनको 25% देना पड़ेगा taxes, ऐसा है dividend पे?
They have to now withhold 25% tax. That's the law. अब इसमें एक कैच है इसके अंदर, देखें वहाँ वर्ड लिखा हुआ है वेयर नो टैक्स इज पेड, लॉ जो प्रोविजन आई है ना डिविडेंड के ऊपर। अब इसमें एक सवाल रेज ये होता है कि जनरली इवन इफ यू आर टेकिंग अ टैक्स क्रेडिट और you have got depreciation losses or whatever and you end up in a loss, you still have to pay minimum tax. So 13 का मिनिमम टैक्स पे करना है आपको। अब सवाल ये कि मिनिमम टैक्स पे करना, यहाँ पे वर्ड लिखा है एनी पेड, तो मैं तो इसको लिबरली इंटरप्रेट करूंगा कि जी मैंने मिनिमम टैक्स तो दिया है, तो मैं नो टैक्स पेड की, लेकिन डेफिनेटली मुझे लगता है कि रेवेन्यू इसको नहीं मानेगा। वो कहेगा नहीं, आपके नॉर्मल प्रॉफिट्स पे आपने टैक्स नहीं दिया तो आपको देना है 25%, क्योंकि मिनिमम टैक्स जो है ना वो क्लॉबैक हो जाता है, कुछ आपके पास ऑप्शन होता है, यू कैन क्लॉ इट बैक। तो ये एक डिबेट है, ये मुझे लगता है ये कहीं ना कहीं अब, क्योंकि अभी क्या था इस साल, ये पिछले साल ही आ गया था कि चार्जिंग रेट 25% था, विदहोल्डिंग रेट 15 ही था, तो इस साल इन्होंने इसको इक्वेट कर दिया, विदहोल्डिंग साइड पे भी अब 25 लिया। तो नाउ द ओनस हैज कम ऑन द डिस्ट्रीब्यूटिंग कंपनी।
सही। दानिश साहब, आपका तो क्वेश्चन हम अभी ले चुके हैं। आई एम कमिंग नेक्स्ट टू यू। शोएब भाई, आई विल गिव यू अनदर फर्स्ट चांस बिकॉज आपका भी क्वेश्चन बाकी है। शोएब भाई, शोएब इब्राहिम साहब, I have unmuted you.
हेलो, कैन यू हियर मी? मोहसिन जी जी
जी जी।
हैदर, अस्सलाम वालेकुम। अदनान साहब, अस्सलाम वालेकुम, क्या हाल है आपके?
अल्हम्दुलिल्लाह, अल्लाह का शुक्र है।
हैदर, ये रिगार्डिंग दिस विदहोल्डिंग, तो पहले तो मुदारबा के डिविडेंड पे जो एज ए रेसिपेंट वी वर विदहोल्डिंग 15% एंड रेसिपेंट जो है वो ऑफर करा था 10%। अब ये हो चुका है आपका कि आप जो है वो विदहोल्ड करोगे 25%। इस पे कोई यही अंडरस्टैंडिंग हमारी है हैदर?
ये पिछले साल एक्चुअली टैक्स पेयर के लिए तो ये 25 हो गया था लास्ट ईयर, पिछले बजट में ऑलरेडी 25 हो गया था फ्रॉम अ चार्जिंग पॉइंट ऑफ व्यू, लेकिन विदहोल्डिंग आपके पास वही 15 थी लास्ट ईयर। अब उन्होंने विदहोल्डिंग साइड पे भी फर्स्ट शेड्यूल में अमेंडमेंट करके वहाँ भी 25 कर दिया है, तो आपके ऊपर भी ओनस आ गया। और आपका तो आई थिंक केस भी नहीं है, क्योंकि आपकी तो मिनिमम टैक्स की भी एग्जेम्पशन है मुदारबा की, तो इसलिए आपके ऊपर तो क्लियरली मुझे लगता है कि ये प्रोविजन आ गया और आपको अब शेयर होल्डर्स को 25 होल्ड करना पड़ेगा इफ यू डिस्ट्रीब्यूट 90% एंड यू अवेल द एग्जेम्पशन। वो वाली बात है,
बहुत ज्यादा हो जाएगा ये। आई थिंक ये डिस्करेज करेगा इन्वेस्टर्स को टू दी एज इन्वेस्टमेंट इन मुदारबा से।
ये तो मतलब एक हाथ से दे के दूसरे हाथ से ले लिया ना वापस आपने एक जगह एग्जीबिशन दी कंपनी को और उसमें काफी सारा आपने शेयर होल्डर से वापस ले लिया, तो यू नो द बेनिफिट इज यू नो ऑलमोस्ट टेकन बैक।
डिविडेंड यील्ड को बहुत डिस्करेज करेगा ना, मतलब मेरा भी वो इक्विटी इन्वेस्टमेंट पॉइंट ऑफ व्यू से यील्ड को बहुत इफेक्ट कर रहा होगा।
अच्छा, इस पे रीट्स पे कोई नई चीज है इधर?
एक्चुअली रीट पे भी ये प्रोविजन लगता है ना, सेम चीज, बिकॉज रीट टेक्निकली एग्जेम्प्ट है टैक्स से, आप ही की तरह अगर वो 90% डिस्ट्रीब्यूट करती है इज एग्जेम्प्ट, तो रीट को भी इसने हिट किया है। तो रीट का बहुत हाईलाइट हुआ है विज़ द कंस्ट्रक्शन इंडस्ट्री। तो कल अगर आपने वो दुनिया टीवी रात को सुना होता तो वो ऐसे लग रहा था कि कोई पता नहीं को प्राइम मिनिस्टर साहब मतलब बहुत ही ज़्यादा नाराज़ हैं कि भाई ये आपने एफबीआर ने जानबूझ के सैबोटेज करने की कोशिश,
बिल्कुल,
कंस्ट्रक्शन पैकेज को। आई थिंक कुछ करेक्शन आएगी इसकी वजह से, अब खाली रीट के लिए आती है, सबके लिए आती है, दैट इज समथिंग टू बी सीन।
And the same applicability of the mutual fund also?
Yes, yes.
अच्छा, उनके भी investors they have to pay 25% on the withhold?
It is they do distribute you know fully the profits, तो उनके ऊपर भी वो भी exempt हो गई, म्यूचुअल फंड itself exempt हो गया, तो ये लॉ तो सब पे अप्लाई करता है।
अच्छा,
दानिश साहब, यू वेलकम सर। दानिश साहब,
Assalamualaikum.
Assalam ji.
Assalamualaikum. Can you hear me?
Assalam Danish Sahab ji.
हाँ, ये मेरा सवाल वैसे काफी हद तक आंसर हो गया था कि वही कि जो विथहोल्डिंग 25% वाला रेट वो फंड्स वगैरह पे भी अप्लीकेबल हो जाएगा मेरे ख्याल में काफी हद
जी जी.
तक। अच्छा, बजट के अलावा क्या मैं एक सवाल कर सकता हूँ रिगार्डिंग रिटर्न फाइलिंग ऑफ नॉन रेजिडेंट, और इट इज नॉट अलाउड टू मी?
आई थिंक बजट तक ही रिस्ट्रिक्ट करें तो बेहतर है, वो फिर
ओके, नो इशू. थैंक यू.
Thank you, Danish Sahab. So I think that brings us to the end of the session. Junaid bhai.
जी ठीक है जी. If there are no more questions,
Because of Isha की नमाज का भी time.
जी चलें. I think it was a very good sessioning, very good session, very enlightening, and thank you to both of you, Mr. Haider Patel and Mr. Adnan Mufti, for taking out time and being with us, highlighting the audience with the pertinent changes affecting the common people and affecting the day-to-day business people. We hope as tax advisors, you would also be part of that process of taking forward the anomalies of affecting the common taxpayers and business at large. And let's wait and see how all of these get addressed. So with this, thank you once again, and over to you, Mohsin.
Thank you, sir. Haider bhai, thanks a lot.
Welcome, sir.
Adnan Sahab, thanks a lot. Junaid bhai, once again, आपको तंग करते रहते हैं. Thanks a lot for full
And I think
coordination.
we also need to thank the participants for being with us.
Yes, those participants who are being participating through Zoom as well as through Facebook, because there are a few participants who are also being there on the Facebook Live. I was going through the chat box. They were communicating with us as well. So thanks all of you, and stay tuned with Memon Professional Forum. You can visit our Facebook page or our YouTube page and like or comment over there. Stay connected. We will be coming up with more sessions, inshallah. So stay blessed. Thank you. Take care, ji.
Allah Hafiz.
Allah Hafiz.